So in today's lesson, I'll be talking about like how to come up with the setup, how to come up with the setup in general. So the first thing that I'm gonna talk about is the market structure, because for you to come up with an analysis or for you to be able to like trade well, you need to know the direction of a market. So how do you know the direction of the market? For you to get the direction of the market, you need to have an understanding in market structure, because it tells us about the trend of the market. I mean, market structure. So market structure tells us that the market moves in three ways. It's either the market is moving in an uptrend. The market moves in three ways. It's either the market moves in an uptrend, it's either the market moves in a downtrend, it's either the market is consolidating. Consolidation. So that's how the market moves basically. So how does the market move in an uptrend? Let me show you something here. This is how the market moves in an uptrend. So this is how the market moves in an uptrend. So with this, uptrend is made up of this. First of all, you need to know where your lows and your highs are. This is our low, and this is going to be our high. Then this is going to be our higher low. This is going to be our higher high. This is going to be our higher low. This is going to be our higher high. Higher low, higher high. Higher low, higher high. Higher low. Higher high. So this is how the market moves in an uptrend. In an uptrend, the market forms higher lows and higher highs. So then after identifying our highs and lows, the second thing is to identify your break of market structure. A break of market structure happens when the market takes out, like since we are in an uptrend now, it happens when the market takes out the previous high and forms a new high. So this is going to be our break of market structure. Then after identifying your break of structure, that's when we're gonna go for an order block. Our order block in this case is going to be, since we are in an uptrend, our order block is going to be the last bearish candlestick here. This is going to be our order block, the last bearish candlestick. And we also select our order blocks at the turning point of the market, at the turning point of the market or at the extreme point. This is going to be our order block. The market came and mitigated our order block and pushed up. This is going to be our second break of structure here. Our order block is going to be the last bearish candlestick here. See, order block. The market mitigated our order block and pushed up again. Broke the structure again. Break of structure. This is our break of market structure. Break of market structure. Then order block. Same thing. We take our order block at the higher lows. The market pushed up. Break of structure. After break of market structure, we're going to have this. We're going to have this. This is going to be our order block. Higher low again. If the market is going to continue moving in an uptrend, that's what we are going to do. We're gonna identify break of market structure, take our order block at the extreme point. The last bearish candlestick. Remember that we're in an uptrend here. So this is going to be our uptrend. So this is basically like the basic way of coming up with a setup. Identify the trend, identify break of market structure, then identify your order block. Order block in this case is going to be the last bearish candlestick, the last bearish candlestick while we are moving in an uptrend. So let's talk about a downtrend now. A downtrend is going to be exactly the opposite of what is happening in an uptrend. This is how the market moves in a downtrend. So then the second thing that you need to do here is to identify our highs and lows. In a downtrend, we are having a high. This is going to be our high. This is going to be our low. This is going to be our lower high. This is going to be our lower low. Lower high. Lower low. Lower high. Lower low. Lower high. Same thing. After identifying your highs and lows, we are looking for a break of market structure. This is going to be our break of market structure here. It happens when the market takes out this previous low and forms a new lower low. Break of market structure. In a downtrend, our order block is going to be the last bullish candlestick here at the extreme point. We take our order blocks at the extreme point, or the turning point of the market. This is going to be our order block here. The market came and mitigated our order block and dropped. So after the market drops, it takes out this previous sorry for this previous lower low here, break of market structure. After break of market structure, we are going to have this order block. Break of market structure, our order block is going to be the last bullish candlestick here. So this is how we coming up with the setup in an uptrend or in a downtrend. I'm not going to talk about consolidation here. I'm going to touch a consolidation when we are dealing with liquidity and show you how to come up with a setup after the market forms a consolidation. So now let's go back to the charts and show you exactly what is happening in real life. Let me delete this first. Okay. Okay. I'm gonna start with a bigger time frame first. So this is a USD 4-hour time frame. 4-hour time frame. In this 4-hour time frame, like I will like us to focus on the let's focus on the current structure from here up to here. So in this current structure, you can tell already the market is moving in an uptrend. The reason why I'm saying in the current structure the market is moving in an uptrend is because of this. This is our This is our low. This is our high. This is our higher low. Remember that we are saying you are moving in an uptrend. This is going to be our higher high. This is going to be our higher low. Higher low. This is going to be our higher high. This is going to be our higher low. This is going to be our higher high. So you see, we are moving in an uptrend. That's the first thing that you need to understand. So currently here like this, like I can't see a very good structure that I can say I can come up with a setup in. I'm gonna drop to a smaller time frame, 1 hour. In mind, I know that all in all, US state is moving in an uptrend. When US state is moving in an uptrend, currently US state like still structure in US state like still not good. But still, in my mind, I know that US state is moving in an uptrend. Let me go to 30 minutes again. So in 30 minutes time frame, if you can focus on the current structure, you may find out where the market is moving in a downtrend. It's moving in a downtrend. But remember that each and every time frame has its own trend. See, in 4 hours, we were moving in an uptrend, but in 30 minutes, we are moving in a downtrend. So for now, I'm just gonna follow the time frame that I see here on 30 minutes. The reason why I'm saying we are moving in a downtrend is because of this. This is our high. This is our low. Lower high, lower low. Lower high, lower low, lower high, lower low, lower low. So you see, clear downtrend. So after this, I'm gonna focus again on the current structure here. What is happening is that we are having a break of market structure here. We are having a break of market structure. This is our break of market structure. This is our break of market structure. And our order block, remember that our order block, while like I said, our order block is going to be the last bullish candlestick here. So this is going to be my order block. I'll use a 5 minutes order block here in this case because I know that there's a candlestick here. So this is my 5 minutes order block here. $30 minutes. You see that in 30 minutes, that 5 minutes order block is on that week of that candlestick. So this is going to be my setup on US state. So I'm willing to take my silly opportunities from this 5 minutes order block. You see, this is actually what is happening. Let's change a pair. Let's go to gold. Let's check gold. Gold against US dollar. Gold, I would like us to start exactly in 4-hour time frame. 4-hour time frame. This is gold for our time frame. Like the reason why I'm using a 4-hour time frame is that, okay, in this case, I would like to use a daily time frame. We are using a bigger time frame in order so that we can get the overall trend of a pair. So here gold, go back to 4 hour. There's no information here. Oh, this is not gold. This is not gold. I want to gold. I want gold. Sorry for that. Gold for our time frame. Okay, I would like us to focus, like put our focus firstly from this point. From this point up to this point, we can tell that gold is moving in a clear downtrend. This is a clear downtrend. So after finding the trend, the second thing is to identify your highs and your lows. This is going to be our this is going to be our high. This is going to be our low. This is going to be our lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low here, lower high here. You see, this is shows that you are moving in a downtrend. So after that, the second thing that you should look for is now to come up with a setup. I'm just gonna like zoom here, try to see what was happening here. Okay, currently you can see that we had a break of market structure here. We had a break of market structure. After this break of market structure, remember that our order block is supposed to be the last bullish candlestick. Our order block is supposed to be the last bullish candlestick. Let me add a text here. BOS. Let me add a text here. It's going to be our break of market structure. After break of market structure, our order block is supposed to be the last bullish candlestick. This is the last bullish candlestick here. See, the market mitigated our order block. We take our trade on this order block, and going to be our order block. Our take profit is going to be on our next low. See, stop loss above our order block. The market came and mitigated our order block, pushed it down, and take profit was reached on the next order block. See, that was a downtrend. Now, after this, the market shifted up. The market shifted up and pushed in an uptrend. So let me remove this. In this case, I would like us to focus on this. Let me remove this. We had a break of market structure here, and we had a change of character here. Don't get confused about change of character. I'm gonna talk about change of character in the next videos that will be recorded. So this is a change of character. Change of character is more like a break of market structure, but it happens when the market is changing a trend. So break of structure, change of character here. Our order block in this case, since you have a change of character, is going to be the last bullish candlestick. I mean the last bearish candlestick. Now we are moving in an uptrend. This is our order block. See, the market mitigated our order block. If you take our trade from this our order block, this is going to be our point of interest here. Stop loss below, then take profit on the next high. Market pushed up, take profit was reached, and continue to move up. Now, this was on 4-hour time frame. Let's become flexible with time frames. Let's change time frames. In smart money concept, there's no specific time frames that I'm saying like we should look for setups on it. You need to be flexible with time frames. You need to be flexible with time frames. Need to be flexible with time frames. Let's go back to that trend. Okay, we were from here. So you see that after the market mitigated this order block, it continued to move upward. So it shows us that we're gonna look for buying opportunities. We're gonna follow the trend. Okay, as the market is moving, like it creates higher highs and higher lows. It for me a nice structure. Okay, on the current structure here, I can see that we are having this. This is a break of market structure. Clear break of market structure. After break of market structure, second thing is to look for our order blocks. This is going to be our order block. Our order block is here, the last bearish candlestick. This is going to be our order block. And one thing that gave me a guide on to take this order block is that we had a 3 drive. A 3 drive, I'm gonna talk about it again when we are dealing with entries. It is a trend line that is moving towards our order block. You see, market came and mitigated our order block, and the market did what? Mitigated our order block. Take our trade here. Stop loss below. Then take profit on your next high. See, take profit was reached. Let me remove this. So still after the market mitigated this order block, it continued to move in an uptrend. So I can see that again that there's a break of minor structure here. Remember that already you know that the market is moving in an uptrend. So for now we can look for scaling opportunities. So we are having a break of minor structure here. This is a break of minor structure, and our order block is going to be the last bearish candlestick. This is going to be our order block. This is our order block, the last bearish candlestick. See, the market came and mitigated our order block and pushed up. See, if you can take our trade from this point, stop loss below our order block, then take profit on our next high. The market pushed up and our take profit was reached. So let's still continue trying to look for setups that happened on this pair. This is my favorite pair, gold, and I'm gonna give you more explanations on it. So still the market is moving in an uptrend. Remember that again, the same strategy that I'm using here on gold, we can still use it to trade every pair. Bitcoin, cryptocurrency, you can trade on there with it. So still, as the market continues to move in an uptrend, we are having this. This is going to be our break of market structure here. After this break of market structure, we are going to have our order block, the last bearish candlestick. See, the market mitigated our order block and pushed up. If we take our trade from this order block, from the opening of this order block, and then stop loss below here, this is going to be our take profit, our next high. See, the market reached our take profit. Let's continue, guys. Let's continue moving with the trend of this pair. So here, okay, I can see that there's a change here. So you see now the market is changing a trend, because remember that you are moving in an uptrend. Previously we were moving in an uptrend. This was our higher low, higher high, higher low. Then our next high was here. But look at what happened now. The market just took out this last higher low. This is a change of character. Simply shows us that there's a change in trend. Let's look at what is happening next from here. Okay, let's move with the charts. You see, you see, you see. from this point up to this point, the market was moving like in a small downtrend. So this move basically was coming to mitigate the order block that was formed here. There's an order block formed here. We had a break of market structure here. After break of market structure here, we are having our order block. Our order block this is our order block. The last bearish candlestick. Remember that here my bearish candlestick are the black ones and my bullish candlestick are the blue ones. So don't get confused about the colors. See that the market came and mitigated this order block. The market mitigated our order block. After the market mitigated our order block, it continued to push upward, continued to move in its original direction. You see? After that, you see, again, I can see a very nice setup here. This one, I would like to go back to 4 hour. Okay, here, we had a break of market structure here, while the market was moving in a downtrend. Break of market structure. After break of market structure, we're going to have our order block for this break of market structure was supposed to be this candlestick, but look at what happened. The market came and reacted on this candlestick and went down. Later it violated it, so we are going to have a change of character here. Remember, change of character happens when there's a change in trend, but don't get confused. I'm going to talk more about it on the next videos. So after this change of character, we are having our order block here. Our order block. This is our order block for our order block. If you take a trade on this 4-hour order block, maybe let's assume that you are using the 50% of this order block. Remember that we have different entry types. Some prefer to use the open of an order block. Again, I'm gonna teach you about how I entered my trades. For now, let's just use the opening of an order block. Then your take profit is going to be your next high. This is our next high. The market pushed up, but you can still use the confirmation of a bigger setup. Remember that the market mitigated this a bigger setup, order block of bigger setup. So you can set your take profit to 1 here, then your take profit to here using the a bigger time frame setup. The market pushed up and mitigated our order block. You see, the market mitigated our order block. So again, the market continued to move in an uptrend. The market continued to move in an uptrend. Allow me to go back to any smaller time frame. Allow me to check a small time frame and see what was happening before. Allow me to switch to 30 minutes time frame. If you know like the overall trend of a setup or of a certain pair, you need to be flexible with the time frames. Don't just stick to a one time frame, maybe a bigger time frame, because you might miss opportunities in a smaller time frame. You see that I'm from 4 hour time frame, now I'm on 30 minutes. It's because the reason why I'm confident about switching the time frames is because I know the trend and I know where the market is heading to, so I can find opportunities in all time frames. So in this case, if you can focus on the current structure here, we are having an SH here, stop hand. This is a stop hand. A stop hand happens when the market takes out a previous low. This was our previous low. So below this low, there's liquidity resting on it, but I'm gonna talk more about this when I'm recording a liquidity video. So SH, then BOS, break of market structure. After break of market structure, we're gonna have a order block. Remember that in an uptrend, our order block is supposed to be the last bearish candlestick. This is our order block. The market came and mitigated our order block. After the market mitigated our order block, if you take our trade from this order block, if you take our trade from this order block here, take our trade from this order block here. Let me use the opening of this order block. Then stop loss below. Our take profit is going to be on our next high. You see, take profit reached, and immediately after the market reached our take profit, there was some small reaction, and then the market continued to move in an uptrend. Let's see what is happening. The market continues to move in an uptrend. Allow me to check 1 hour time frame to see what is happening. So the market is still moving in an uptrend, even though it forms like a small consolidation, but it's a movie in a uptrend. So let me go to 4 hour time frame again. From 4 hour time frame, okay, allow me to remove this setup here. Allow me to remove this setup. We had a break of market structure. Break of market structure. After break of market structure, our order block is supposed to be this candlestick. This is supposed to be our order block. The last bearish candlestick. Okay, you see, there was a reaction on this order block. The market entered this order block and pushed up, reversed back to the order block, pushed up. Later, it started to volley the order block. So I will believe that that was a change of character. Now, the market, the current structure, it shows that a gold is moving in a downtrend. Gold is moving in a downtrend. You can see this is a downtrend. See, this is a downtrend. After identifying our trend, let me go back to 1 hour, because see, like I identified this downtrend from a bigger time frame, which is 4 hour. Yeah. Now in 1 hour, I'm gonna look for setups. So this is 1 hour. Okay, if you can focus on the current structure here, if you can focus on the current structure here, I can see a very nice setup that played out on gold. Traded this setup. So we had a break of market structure. We had a break of market structure here. Break of market structure. After this break of market structure, our order block was here. The last, remember that here we're in a downtrend. So on a downtrend, our order block is supposed to be the last bullish candlestick. Also select our order blocks were at the turning points. Okay, our order block. Let me go back to, allow me to check 30 minutes time frame. I want to pick our order block here. I'm looking for the last bullish candlestick. This is our order block. This one. This is our order block. See, the market mitigated our order block and pushed down. Break of market structure, order block, then the market pushed down. So as the market was pushing down, let me go back to 1 hour time frame, because that setup I made it from 1 hour time frame. So you see, if we enter here, our take profit is supposed to be our next low. This is our next low. See, the market reached our next low, and it also took out this next low, lower low. So this is going to be our break of market structure. Break of market structure. After this break of market structure here, we're going to have our order block. This is our order block. So we are still waiting for this buy, for this sell opportunity. Again, there was a small setup that played out from this zone. But with this one, the reason why I didn't participate on this sell is because there's a trend line liquidity that is resting below there. But some people managed to get this sell. One thing about gold, like gold just reacts in any order block. As long as there's a break of market structure, it reacts. But it doesn't. Some order blocks doesn't hold. Like those order blocks doesn't hold for most of the times. They can hold a price for some time, but another times, like they might violate the order block. So here, I will just allow you to stick to like a high probability setups. But for what happened here, that is that we had a break of market structure here. Then order block was from this point. That was our order block from this point, and we had a QMA level from this one, from this low point, QMA. So that's all for today. And I just wanted to record the video about how to come up with the basic setup. More videos are coming. I'm gonna send them to you. So that's all about today's setup. If you didn't understand anything about this, just send me a message like for clarification. Yeah. And again, one most important thing that will allow you to get the concept well is to practice. You need to practice, practice, and practice and practice. Thank you guys. More videos are coming that cover the whole strategy.